I'm Daryl Jones, Director of Research at Hedgeye, and we have one of, I think, my favorite segments of the Investing Summit, discussion about everybody's favorite stock, Tesla. And we're pleased to have Charley Grant from the Wall Street Journal and our own industrial sector head, Jay Van Sciver, who's been a longtime bear on Tesla. And with that, I'll kick it off to Jay.
Great. Thank you, Daryl. And Charley, thank you so much for joining us. I am very excited to have you here. I bristle a little bit at Longtime Bear. We launched in June of 2017 on Tesla.
Short time bear.
Which, you know, depending on your horizon, pod versus long-term investor. But I just want to get the elephant in the room out of the way, you know, right at the beginning here. Are you, in addition to being jealous of Elon Musk, are you also a saboteur or just in the pocket of big oil?
I am whatever the internet says about me. Whatever you find on the forums, it's all true. Just, you know, whatever you read, take it down, it's gospel. But I am most certainly jealous of Elon Musk. He commutes to work in a private jet, and I commute on the F train to and from Midtown Manhattan. So I've got to get credit where it's due. Yeah.
The subway that earned its letter.
That's right. That's right.
So, you know, more seriously, can you talk a little bit about how you came to the Wall Street Journal and maybe more specifically how you came to cover Tesla?
Sure. I was assigned Tesla among a number of other companies, you know, when I joined the Journal in 2015. And it was definitely still an interesting story back then, but it was much simpler. You know, Tesla was making luxury cars and not making much money, but the company was chugging along, still clearly in growth mode. Its best days were ahead of it, and it started as a bit of a dull roar, but I've been amazed just at how consistently the stock can surprise even the closest observers, and there's truly never a dull moment with these guys. So I cover maybe 100 companies in total for the Journal. Most of them are interesting either never or in a few brief moments, and Tesla is nonstop excitement for better or worse. So it's something we will remember for a long time, no matter how this story turns out.
Absolutely. When you picked up Tesla, how did the company respond, and has that evolved over time? Are there things they're more responsive on, less responsive on?
Yeah, so Tesla's never been much to comment on their financial condition, which is, I'd heard on the street, is what we focus on. The point of the Heard on the Street column is what investors should be thinking about. So we have many writers who touch Tesla in some form at the Journal, but we are focused on the numbers, the stock, what's going to happen with the bonds, all the things that the buy side should care about. Yeah. And so Tesla, it makes perfect sense from their point of view. They want to comment on their revolutionary products, right. The clean energy, revolution, for lack of a better word. Yeah. That's what they're focused on. And the balance sheet, less of an emphasis for the PR department. And that's been the case pretty consistently since I started covering them.
So when you ask them questions about their financials or the balance sheet, like what type of response do you get?
They'll refer me to things that public communications. Very rarely will you get any additional color. So you have to do your own work and your own analysis, which hopefully makes it a sharper, better product. But talking to management can be a good thing or a bad thing for getting too close to them, and basically we are very much at arm's length. So and they're courteous and professional, to be clear, but their PR office is very small relative to the overwhelming interest they get. Yeah. And they're not engaged on the stuff that I'm focused on.
And does Musk ever get involved? Because there was that example of him thinking he was off the record earlier this year. I think it was with a reporter from maybe BuzzFeed, where they had exchanged emails back and forth and it wasn't clear he was off the record. Does he ever get involved in this, like when you guys are asking questions? Or
not with me personally, but he has with my colleagues.
With the Journal, yeah.
Yeah, and so what you have to remember about, Elon is also a lot of the communications happen in public, right? Not just Right. So one time he did tweet a story of mine, and he said, "Stop biting my finger, damn it." And which I guess is a reference to the Charley bit my finger YouTube clip, which was a very exciting morning, in my household because my phone shook a little bit and shook for an hour or so and didn't stop throughout the whole day.
He can be funny.
I mean, it was funny. I laughed, and
Yeah.
I mean, he is a funny guy, and there's, you know, he's a charmer, and he is a great storyteller, and that's one of the reasons Tesla got to this point.
Yep.
And you know, the question you know, that I've been trying to answer for the past few years, and I know Jay has too, is do the cold hard realities of the business, you know, match the hype? And that's where I start to have issues with the story.
Yeah.
You have a background in financial analysis, you know, some at least training formally there. Do you think that changes the way you cover it relative to normal reporters?
Yes and no. I mean, there's certain, you know, things that, I mean, I probably pay more attention to how the bonds trade on a daily basis than most of the media. But, you know, I think, you know, I am a journalist first, and we are looking for good and interesting stories to tell.
Yeah.
And if there was nothing interesting to say about the financials, we'd probably move on to something else. But as Jay has found in his research, there's plenty of interesting things to write about.
One thing I wanted to ask you about is you get more of the public interest side of the world, like people who come to you with things that they think need to be in the public domain. With the executive departures, have you found anything interesting or anybody coming to you? Because there's a lot of turnover.
There is.
Through the ranks of
and
Tesla.
you know, I mean, I don't comment on specific sourcing, but
that's okay. It's just us.
Right. It's just you, me, and 10,000 friends, right, or however many. But you know, obviously, speaking to former executives and employees is a good way to find out what goes on inside a company.
Yeah.
That's challenging because Tesla, like most of Silicon Valley, tries to keep employees under NDAs and that sort of thing. Yeah. And you know, for the most part, I'd say people respect that.
Yeah.
But you know, it's a big world, and a lot of people have cell phones.
Yeah.
And a lot of people have, you know, they have ways of reaching us.
And there are people that, at the end of the day, just want to get things out there if they think something inappropriate is going on, or they're uncomfortable.
Sure. And you know, anytime you're dealing with a former employee, you know, you have to filter it appropriately. Is this person, you know,
jealous of Elon Musk?
Jealous of Elon Musk, or you know, I mean, if they are angry about how their employment went, you know, that's a standard, you know, thing to evaluate when, you know, looking through his sources.
Yeah.
And trying to weigh how credibly you should take whatever claims have been made to you.
Yeah.
But you know, I think you know, and I haven't gotten to any like specific exciting bombshells from talking to former employees, but you get a general sense of the way the company is run.
Yeah.
And it just, my impression as an outsider is it's all, you know, fly by night, you know, very, very disorganized, very chaotic. And what's problematic from an investing point of view is Tesla is a long-term story, right? They don't make money now. They're supposed to make a lot in the future. And the focus is always short-term, right? So it's 5,000 cars a week, 5,000 Model 3s by June 30th, right? In the last week of the quarter, we've got to make this number. And then, so people get pulled off, you know, their office jobs and work the factory line.
Yeah.
Then we see a similar thing this past quarter at the delivery centers, and we're living week to week, and this is supposed to be a 10-year, you know, growth story.
Yeah.
And that's one of, you know, that fundamental disconnect is something that I really,
That's a
really struggle
very
with.
good point. So actually, Jay, question for you.
I thought we were asking questions of Charlie. Oh no.
Just want to follow up on Charlie's questions. The profitability, you know, idea or target, is it simply a volume? Like if Tesla hits a certain volume, they'll be profitable, or are they actually losing money on every car they make, and you know, will lack of profitability accelerate? Like, can he get to profitability through volume effectively?
So the bull case is typically that there's a deep enough pool of demand that they'll be able to grow sales rapidly enough, and at the same time you'll have a decline in input costs for things like batteries, and then at some point you'll get this like magic, you know, divergence where they take off from each other, and Tesla will be a $1 trillion company. There are some basic realities of things like variable costs and fixed costs in manufacturing. We'll know a lot more in a couple weeks, but we make, I think, some pretty optimistic assumptions for things like incremental gross margin, like how much gross margin do you get on that next car, and some pretty optimistic assumptions on SG&A leverage, where we can look at SG&A ends up being a really important breakpoint in the model. And I find it very hard for them to get to profitability in the back half of this year. We saw that drop from the third quarter delivery press release. We didn't hear anything about profitability. There are obviously some ways you could sell emissions credits and get a little further, and maybe they'll one-time their way. Legal expenses are going up, I hear. So that falls into SG&A, but
only if you set aside a reserve for them, right?
That's
true.
If you don't pay your lawyers, I hear they don't like it. And if you want the best representation, paying attention to you, you got to pay them. I find it very hard in the current cost structure with current input costs, modeling incrementals to get anything like profitability. I would say that's mostly, I think Phil and I agree that Tesla is down. It's a high short interest name. There's probably a little bit of risk to the upside at this point. And it usually, feels like getting your face ripped off. But from a bull perspective, a risk is that there is a wide perception that they're going to be profitable in either third or fourth quarter, and it's just very hard to model. And that assumption of long-run demand growth, which is where we have spent our time doing the most, I think, interesting work data-wise, looking at residual values, looking at things like real-time measures of demand, like utilization of test drives, or looking at survey data. That we did a deck, I guess, a couple weeks ago. I think we sent it along to Phil. We did actually.
Charley.
Sorry.
Jay knows my brother, so
I worked with your brother on a trading desk for 4 years.
Oh, is that right?
Yeah. So I always. I apologize, Charlie.
You should.
I should.
You should. You really should.
Terrible for Paul. At least I didn't call you Elon.
That's right. Well, no, it's worse to call me Phil.
Is it really? Oh my God, it probably is. So anyway, the reality is that we just see this collapse in demand. So I think there's a real risk that this demand, growth that bulls are betting on. They care about the revenue line. Yeah. They don't care about the profit line. That may not materialize. That there are enough bumpers that fall off of Model 3s or cracked glass roofs. It doesn't take that many people who complain that they can't get their car fixed until people in the general public realize that, hey, maybe that's not the right commute car for me. And that's what we're starting to see. We've seen stunning drop since Elon was charged with, sued by the SEC for fraud in the brand measures.
Interesting. And the focus of much of the news media, myself included, has been a lot of what's going on with the SEC. And there's been, distraction after distraction this summer. The Thai cave incident, just to pick one, and we don't need to get into that. But and it's a challenge covering the company, and then also weighing an investment decision, both for bulls and bears. Is everyone is distracted by who's the chairman going to be? Is the settlement going to go through? And I think today there's a court hearing on that. And we don't know the answers, but what's much more important is, can they move the metal at profitable rate, at a sustainable rate as well. And it's the fundamentals of this company are pretty hard to parse, because in the fourth quarter we have S and X guidance, the older models, the higher end luxury cars. There's no Model 3 delivery guidance that I'm aware of. And it's pieces are missing of what people should even be expecting here. And it makes you wonder just how deep this demand pool really is. They delivered a lot of cars in the third quarter. Revenue growth is going to be way up, but how long does that last for? And how many levers can you pull here to get yourself to profitability? And if you do achieve that, how many times can you pull those levers in the future? And there's more questions than answers on that front, I think.
What are the next catalysts people should be watching, both, I guess, fundamental and then non-fundamental, like the court hearing today? Like, what are the things out there in the next 3, 4, or 5 weeks?
Well, I mean, earnings are probably going to be
The big
3, 4, 5 weeks, my God.
My God, that's like an eternity with the stock.
That's right.
Yeah, I mean, usually third quarter earnings happen the first week of November. They haven't formally announced a date, but you know, maybe around Halloween. Profitability is I don't think it really matters if they hit the profitability number or not. I mean,
It's never mattered before.
right. So, and it's supposed, you know, if they miss that, I don't think it's a big deal. I'm much more interested to hear about the backlog,
Model 3
and
demand.
Model 3 demand, and you know, how much longer is the growth story? Can it be credibly counted on?
Yeah.
And are they going to tease, you know, the Model Y or the semi truck or what, you know, other projects that they've highlighted in the past? But you know, at the same time, with those, you know, capital spending is down, and that's one way to improve your cash flow situation, and that's good. But you know, this is supposed to be, again, I come back to this point, it's been supposed to be a multi-year growth story, and the stuff that they're talking about in the long term, well, it costs money.
Yeah.
And so where is that going to come from?
Yeah.
And raise, you know, they will need to do a capital raise at some point. Even if they become sustainably profitable, which I don't see how in the short term, you're never going to fund these projects without sustained, you know, several billion dollars coming in the door, and where is that money going to come from? And that's the whole point of buying the stock at nosebleed valuation. So
The other answer, I think, slightly longer term, but in my world not long term, which is that January 1st, tax credits for the Tesla EVs are going to get cut in half. So they're going to go from $7,500 to $3,750.
Oh.
And to Charlie's earlier point about demand for Model 3, there's probably a lot of demand for Model 3 if you could make a $30,000 car. At north of $50,000, you're talking about only 15% of cars are sold in that price range. A lot of those are SUVs. And for each $5,000 increment of car price, the number of sales, the market, drops by about a third.
Okay.
So above $30,000, each time you take a step up in price, I mean, they're very, obviously as you go from 0 to 30, like it goes up because nobody sells a $5,000 car. But if you look at that like higher end, that decay that we get of car sales, something like the reduction of a $4,000 credit actually has a very significant effect, or an inability to produce the $35,000 version of the car is enormous in the different size of the market. Another big catalyst I think people are vastly underestimating is that HOV lane access for California is going to be restricted to cars that are basically after Jan 117. So the residual values for things like 2016 Model S's have plummeted by $10,000 over the last 5-6 months. That doesn't sound like a big deal, I mean, unless it's coming off lease in 2019 like 2016s are, or you have a 2016 you want to trade in, or you're thinking about the total cost of ownership of your car. That's $10,000 of incremental cost of the car that somebody's going to bear.
Yeah.
So there's a lot of very relevant catalysts that are less than 3 months away that I think you'll see a little pre-buy in December. We always see pre-buys ahead of the expiration of subsidies or implementation of things like regulations or whatever, increased costs ahead of tariffs. There are things like that. We always see a pre-buy. So maybe fourth quarter gets a little lift from that. But as we go into the first half of 2019, you're going to be able to buy an iPace with a full $7,500 tax credit. And you're going to be looking at a Model X with $3,750 tax credit.
Right.
That's a real, we call it the first loser disadvantage. First person to lose the tax credit is going to operate at a disadvantage. So there are just big structural catalysts that'll make the current difficult situation actually get worse, which is a problem.
Yeah, and I mean, and you know, the iPace does not need to outsell the Model X, right, for it to cause a problem for Tesla on the financial side, right? I mean, I'm not expecting this car to beat Model X head-to-head necessarily, but the point is that there are better capitalized competitors showing up, and it's the marginal sale, right? I mean, it's how are you going to show growth when you haven't made profits, when you've had this market to yourself, and now, you know, the Audis of the world, they're not coming right away, but like they are coming.
Yeah.
And sooner or later, you're going. I mean, the market is not getting easier, and the tax credit is another big issue. I mean, as Jay pointed out, Tesla is very good in Washington, D.C., and bears should keep that in mind. There is always a chance that something happened.
Yeah.
D.C. subsidies have a way of seeming like they're going to go away in Washington and then not actually.
That's really interesing.
So,
have you looked at that with midterms coming up?
I mean, no. I mean,
I haven't looked at that.
I don't. I'm not a 538 alum, so I'll pass on forecasting how the election's going to go.
Yeah.
But I think my base case, so to speak, is that the subsidies will go away as scheduled or start to fade out and be a problem. But you never know, and I don't put that as a 100% probability. I mean, surprises do happen, but if things go as scheduled, then that is a problem for Tesla for sure.
Yeah.
Let me ask you a question. So I was I landed in JFK last night from London after 2 days of meetings and a conference. So all of my mistakes are jet lag. But the question that I said, oh, I'm having this interview with you, and what should I ask? And the two separate people said that I should ask about capital raises. Why haven't they raised capital? And why did they raise debt when they did do a capital raise? And as a preface or as a follow-up to the question, like nobody really knows the answer that I've met.
I certainly do not. Yeah.
But I'd love your just random opinion.
Well, yeah, I mean, it's a mystery, and I don't know what's going on. There's been speculation on multiple fronts, maybe the SEC investigation, because there's the funding security issue, but there's a separate SEC investigation into Model 3 guidance, my colleagues have reported.
Oh, okay.
And so maybe there's an issue with that. Nobody knows. But it is very curious that a company with these massive capital needs in the future and a $300 share price, like just raise, there should be demand for an equity raise. They've never had trouble accessing fresh capital, and they need it. So what is going on? So how's that for a non-answer to your question?
No, I mean, I've had different theories. Like if you talk to, securities lawyers, which I'm sure you have, you generally hear back that it would have to be financial statement accounting fraud for there to be like a side letter or some sort of conversation where they would not approve a registration or endlessly comment on it. I find it hard to believe that, and maybe Model 3 guidance is enough, maybe that's close enough to that, but if a company is reporting that they lose $20-something thousand a car, like if they're frauding, they're bad at it, right? They could take a lesson. I can give them pointers on how to fraud. They're not really pulling it off. And if they had reported 35,000 of loss per delivery, would anybody have cared?
Right. Exactly.
I know I'm about
Profits
to get
haven't mattered in this story, so I've always found that an unsatisfactory explanation.
I can feel like the tweets coming in like, that's not the right calculation. It's fine. It's fine as a calculation. And then, do you have any thought of like why they did debt versus equity?
No, but I wrote a story the day of saying like
that's weird.
Their best asset is on the sideline, the share price. I mean, that's currency, and at that point in time, there were you and I were much lonelier in the Tesla bear world than now. I mean, there's a lot has changed in a year, and it's easy to forget now. But Elon Musk was flying high in 2017. No, very few voices were concerned that Model 3 was about to get built. I mean, the appetite was there, and they don't make money, so fixed paid debt, they'd issued converts before, but converts are a much smaller problem for a non-profitable company because you can settle in equity, of course. And it was, I to this day, I'm baffled. I asked Tesla, they referred me to the conference call, which there was no elaboration, and none of the analysts on the call asked, which struck me as
normal,
but that's a whole separate conversation. But it's why haven't you done this? And then on the first quarter call this year, fast forward to May, that was the one where the analysts got hung up on, and boring, boneheaded questions and let's go to YouTube became household phrases. But on that call, as part of what got lost in the noise there was Elon Musk said specifically he doesn't want to raise. He said there's no need and we don't want to. And I have a hard time it only makes you want, that does not calm down the speculation that something is amiss that is preventing some kind of raise. And I don't know, to be clear, I don't know what that issue would be, but it is beyond baffling they have not done so given their needs. And because Moody's said, they've downgraded the lead bond issue to a C rating in March, and they said you need to do a raise in the near term, which they usually mean is 12 months or less. Well, about 7 months have passed and we're still not hearing about it.
It's pretty easy to model.
So we have some questions from the Tesla bull. I'm not sure who it is.
Go to questions.
First one is, what if demand from China exceeds current expectations? Is that something that...
Do you want to take it?
Sure.
I don't know if either of you have a view.
I think will be a long time before we can answer that question because there's no factory.
Yeah.
And to meet that, it's possible. It's certainly possible but I think given how much has to happen before we even see that factory have ground broken, but it comes back to the capital raise, right?
Right.
Where's the money for this thing coming from?
Yep.
And
another capital need, that's right.
Yes. So that is a risk, and bears should be mindful of it. And bulls, if you want to pin your hat on that, you might be right, but I have a lot of questions. So if you want to jump on that.
Yeah, I think the reality is, from a policy perspective, everybody as we've investigated this, we found that the overwhelming sense is that China, from a policy perspective, and there's a lot of industrial policy that comes down from the top, feels like they missed the internal combustion engine, the chance to have Chinese, automakers become competitive, and that they are just going to skip that whole technology and go directly to electric vehicles. And they have a very vibrant electric vehicle market with very active competitors already there. And when, very successful U.S. capital equipment makers, which a car is a piece of long-lived equipment, have tried to enter the Chinese market, tariffs have often been the least of their concerns, although it's probably a more current concern for Tesla. So the idea that they're going to receive the blessing of the powers on high as opposed to a local competitor, which are very experienced in advance, I think it's a far-fetched place for Tesla to have very successful, very profitable growth, albeit a large market. It's a large market because China wants it to be a large market. They want it to be a large market because they want to dominate it. Yep. They don't want Tesla to dominate it. They want an American company to dominate it.
Okay. Another question from the Tesla bull. What kind of charging network does the competition have lined up?
Electrify America, which is behind the supercharger network, to be sure.
Yeah.
But that brings up again the issue of the balance sheets of these competitors, right? There's the consortium of companies is kind of teaming up, and you're starting to see that not just on charging technology, but like autonomous vehicles. You see Honda collaborating with GM on Cruise. That was recently announced, and so Tesla is far behind, but or far ahead. Excuse me. We're speaking off the cuff here. On that front, but I don't think that's a deficit that can't be made up easily by the rest of the industry. Yep. And is that a top priority for these companies? They say so. We don't really know, but Tesla, is going to have to keep building that supercharger network to maintain that advantage that they currently have. And once again, that costs money. So, that would be my response.
Yeah, for one thing I'd say is it looks like there are a lot of them, but when you actually are driving on the road and you have to divert, to go to some charging station versus, the number of gas stations, it's kind of ridiculous. It is an advantage versus other EVs. Well, EV adoption is going to take off until there's more chargers, so It's kind of a chicken and the egg. Yeah. But, we always joke that driving a Tesla is a little bit like, a hobby, right? Like it's having a boat. It just takes longer to get if you're going to use it on a long distance drive, it's just going to take a really long time because you have to divert to the superchargers. The other things like the VW emission settlement will mandate that they spend quite a lot of money building their own network. There are a number of pay-for chargers like ChargePoint, and there's charge points all over the place. So in terms of like the half-hour charging, yeah, that's Tesla's further along in that. In terms of these slightly longer charging windows or lower voltage chargers, those are all over the place. So you can charge you can go eat lunch and charge a charge point for an hour and a half, and that's okay. You'll get a decent charge on a Bolt or something like that.
Yep. So this is more for Jay, but you talked about the value of Tesla used cars and the fact that they're plummeting to some extent. I guess the first thing is, why is that important? And then how do you think about GM and Ford with respect to their value of their used cars?
So it's been the reason it's incredibly important is that it's been an enormous tailwind to Tesla. So if you bought a 2015 Tesla, the fact that the residual values have held up well means that for very little incremental money, you can trade it in and get a new one. And since there's a very active used market with high prices, they can turn around and sell that. It's essentially a way to fill channel demand, with used cars as that sort of builds up. And you see inventory go up, that tailwind tends to go away, and naturally, usually not in this sort of a time period. It lowers the cost of leases. Depreciation is a lease component. It just lowers the total cost of ownership. Like if you're looking at any piece of equipment, you drive it off the lot and it's worth like 30% less, right? Well, that hasn't been true for Teslas. That's been a real tailwind. I mean, I think even the president of Tesla, Michael Bloom, has made the point that he's had a number.
President of Hedgeye.
What did I say?
Tesla.
Sorry.
I was like, I don't know that. I don't know that person.
No, president of Hedgeye.
Okay.
He is a PayPal alum, though, so he is, certainly in the fold of sort of the Elon Musk fans. He commented that he has traded them in, which makes owning the next one much less expensive. If you're looking at the stock price gains, like a lot of retail holders own Tesla stock, right? And have been, I'm a shareholder. I mean, how many people have you heard who are shareholders and 2012 model or 2013 Model S buyers? When they want to.
I don't have hard data on that, but I would love to see it.
I have a survey we've published, and I don't believe it's so high. It's 27% of people say that they bought it with their entire car with Tesla stock.
Okay, yes, but in terms of, I just meant more general overall, owning the car and the stock. I sense it's high.
It's a lot, because there's a lot of wealth created by the Tesla stock price rally, like the ultimate reflexive. We always kind of joke it rhymes with Henry Ford wanting his employees to be able to afford a Model T. It's like, Elon Musk wants his shareholders to be able to buy a Model S3 or X. So I think when you're looking at trade-ins and things like that, it's hugely important in evaluating the total cost of ownership of a car, which is very important, whether it's leasing, whether it's how expensive is the financing, because it's asset-backed financing. Another thing to consider is that Tesla has a very large balance sheet value of residual value guarantees. They're at 50%, and they're a very narrow window and a very large dollar value. But if you suddenly saw, and we haven't gotten to this point yet, but if you saw another, say $10,000 decline in the 2016 cohort, some of that distribution probably starts to fall below the 50% threshold. So you could see them in a more adverse scenario than we're in right now, having to pay or make good on residual value guarantees, which is what took out Navistar and some other, that's a, feedback loop that can be extremely painful for manufacturers. So the answer is it's hugely important, and you should pay attention to it. It reflects the brand, it reflects cost of ownership, and it's real time.
And falling used car prices, if that becomes a market-wide condition, that's certainly a problem for Ford, GM as well. But that kind of drives home the reality that auto business is commands low multiples for a reason, right? Ford and GM trade at 6 times earnings, and it's not. I don't think the market is wrong in that assessment, really. I mean, every single thing has to go right, including things beyond your control, to make money over a cycle in this business. And that's one, to your question at the start of this, of how did you get interested in this story to begin with? It's like, why is this company valued like a software company when they're just picking out all the worst business, energy generation and car making, and like
Low margin, capital intensive.
These are tough businesses, and things go wrong, and you don't make money, and companies go bust, and that's life in these industries. So why jump in with 2 feet? So
is Tesla going to be starting an airline next? Is that?
Digital eats world, so they have to find a way to digitize an airline.
Yeah. And today's joke is tomorrow. Today's joke is tomorrow's headline with the story. So you never know.
Music streaming. There've been all kinds of crazy
music
things.
Streaming. Yeah, that was a fun one.
It's another really high margin.
We have a few more interesting questions here. I actually don't know what this means, but I'll ask it. Do you give any credence to reports of check kiting?
Oh, that they're not able to pay their bills, basically.
Yeah, I have not sorted out what's going on that. The Wall Street Journal has not published anything. I've seen the reports. There are anecdotes of people complaining about paying for a car and not getting it, which is obviously a concern. But they are anecdotes. And I think you have to remember that Tesla's had so much turnover in finance and accounting and process management jobs that, like, if this is really widespread, it might just be a reflection of chaos at this company, right? And as I said earlier, that it's seat of your pants, next week, next month, style management. And I mean, Musk tweeted, that we're in delivery hell and there's a car carrier shortage, and we're building our own this weekend. And I thought, that's weird. Wouldn't we have heard about that from, Ford if they were having trouble with that? And so, they didn't plan ahead that they would for higher deliveries, which is strange because they were planning for higher deliveries. And so, I mean, you can't set what's willful and what's just disorganization. I don't know, but neither is good.
Yeah, that's a good question. So what is if you think about all these people that are leaving, and I don't know if you've talked to some or not, but like, is it just because of this chaotic culture that they're working in, or like, are there some themes that are going on as to why people are leaving?
Well, it's a hard place to work, right? Yeah. I mean, the pressure is constant. Sometimes Mr. Musk will make a proclamation at a conference about what Tesla's next, milestone will be. It makes splashy headlines, and a senior engineer is finding this out for the first time that this is his new assignment, and it will fall to him or her to make this work.
Yep.
And so it's like, wow, so I just found out about this, and it's my problem now. And Silicon Valley, he says it himself. We are tough and demanding. Like, if you want a cupcake job, you can go somewhere else.
Yep.
And Silicon Valley is a high turnover place. And it's a tight labor market. But so executive turnover, you try not to make a big deal out of each individual one. But like, some of these, what's happened, CFOs do not leave $50 billion companies after 14 months, which we had in 2017.
Right.
Chief accounting officers who have been at their last employer for 25 years do not leave companies after 1 month.
Yeah, and then this
a lot of money.
This week, wasn't it there's a person that's in charge of revenue, or there's another senior accounting person left this week.
Yeah, I think they're a level below. And you have to be careful with title inflation. Everyone in the world is a president and director and chairman and king, and but that title will suggest more importance than
it's actually.
But people are leaving at high rates, and sometimes the replacements are not immediately coming, and it makes you wonder who's watching the ship. And keep in mind, Elon Musk is CEO of SpaceX, and
Neuralink.
The brain surgery startup.
And boring.
Yes, and boring, and don't forget the Boring Company.
Yeah.
And he
has to impress Grimes.
So he's distracted, right? And so. He's not the only person in the business world. Jack Dorsey runs 2 companies and seems to be able to juggle it more or less. But who is at the helm and the day to day, and it's not clear to me from the outside.
Yep, makes sense. Another question here, which is more specific to the car. Do you think there are serious issues with suspension and other tire axle defects? See a ton of pictures to support that claim. I don't know if that's more anecdotal or.
It's anecdotal, and I have seen the pictures, and
Yep.
the pictures are of
A wheel that's off.
a wheel
heavy
is
car.
off, and that catches your eye because these cars are supposed to never break. But again, these are anecdotes, not data. Same response as the check kiting issue. Like,
Yeah.
I mean, we have not put together comprehensive data of how often this happens.
Gotcha.
And
Yeah.
would I be concerned if it was my car? Yes, but I mean, I think there are bigger macro and micro issues that we've been chasing than that.
I think that over time, those kinds of pictures do erode the brand, and that's what Longs in this name are focused on. So if the brand starts to degrade, and more generally, our launch on Tesla focused on the conclusion that story stocks hate dates with reality. Like the Model 3 can't be as good as people thought it would be, but more specifically, that every great auto brand has been made by great manufacturing.
Yeah.
Not the other way around. Like the Model T was a manufacturing marvel, not like a unique self-driving car, right? Which is pretty funny to think about it as a self-driving. Somebody should make that Model T. Or Toyota. Why is Toyota, a very successful competitive entrant, into the U.S. market through the 80s? Why? Because the cars worked great. They had great reliability, Why did Kia struggle to get in initially? The Kia initial reliability was quite bad.
And these are long duration assets, right? Everybody
Yes.
likes their new car the first day they have it, right? But like, how do you feel about it in 10 years? And maybe the Model 3 cohort will still love it in 10 years, but we simply do not know the answer to that question.
But I do think that what we know firsthand about, from people who worked on the line and from Elon's own comments, is that the car is developed over a very compressed window. We know that there's very high turnover of individuals on the line in addition to in the executive suite, and that they constantly make changes. I mean, Elon on the 2015 conference call says, we make 20 changes to the Model S a week. And can you imagine Foxconn trying to roll out iPhones, making 20 changes to the architecture of the iPhone a week? Right. You can't mass produce that way.
And the auto supplier business is no great shakes either, right? In terms of profitability. And so you simply can't be changing plans on the fly and keep your margins. So,
And we know that they beta test, there were initial, I think they've probably acknowledged, or Elon's acknowledged, that the initial Model 3s were more problematic. Consumer Reports tested an earlier VIN or something like that, and now they're better. So we know they're changing how they're manufacturing these cars. That's a nightmare, right? What if you have to service a car and you're trying to track down the VIN and what was on that car versus other cars you've repaired, and what part does that get? And we talk to people on the line, and they're like, oh yeah, they changed a piece of trim, and we got to take a hammer and bang it into shape, show it fits. And if it doesn't fit, we got to skip that piece. We know that the warehouse was moved out of Fremont to make space for the Model 3 line, so they have trailers of parts. The parts aren't always there. There's a whole manufacturing focus that's lacking that will, I think, over time. That's fine if you're making $100,000 cars, $150,000 cars. They're basically handmade. There's a very high touch service on the back end. Apparently, you can't get your Model X fixed if you have an accident, but aside from that,
but those buyers also have multiple cars, right?
They don't care.
Yes. And
I'll have to call the driver.
Right. And so one of my favorite things is when you read like the forums and you'll see a Model S or X horror story, and this didn't work and that didn't work, and the punchline is always something like, so we had to take the Mercedes to the dinner party instead.
Oh, my Bentley was back from service.
But if you're scaling into the mass market, you are going to find buyers. You can't reach the sales projections they're talking about without finding people who have money for one car and need to get it to and from work, and they cannot have their transportation screwed up.
And that was our thesis, that you can't do that in mass production.
Right.
And that's going to erode the brand. And so far, our data says that's playing out.
All right, last question here. We're going to wrap it up. We're sitting here in a year. What's happened, I guess, to the company, to the stock? What are we talking about at that point? I know that's a long ways into the future for this company.
A year?
Yeah.
Well, we'll have aged 5 years by then, so that's the safe prediction. Yeah. I think, I don't subscribe to the theory that they're going to go bankrupt imminently, but I think the shine is going to come off the growth story. One the cash flow numbers have been alarming, and especially so when you consider that they've had positive working capital as revenue grows.
Yeah.
And if that stalls out, the cash flow is going to start to look even worse. You can't stretch payables forever.
Yeah.
I think, you know, Tesla's still around, still making cars, but, you know, not the stock, not a hot stock anymore by any stretch.
Who's the CEO in here?
Elon Musk.
Yeah. And Jay, what do you think? We're here a year from now.
One, this will all be totally obvious in retrospect. Charlie will be writing his book, or hopefully publishing his book.
You don't know anything about the book publishing industry. Yeah.
I hear you're a very prolific writer, you know. And that what will have happened is that demand will have disappointed for cars in this category, that you can't have that much penetration of, say, sedans or whatever in that price category, and that it will finally be a weakening of the brand and demand that ends up impacting it. I think they raise. I don't think they go bankrupt either. I think there's a reflexive element to it that will be obvious in retrospect, that the most remarkable thing about Tesla was its market cap. But I think it's got a much lower share price, much lower share price a year from now. And probably we won't do a video because no one will care.
Yeah.